We negotiate based off of payment and we back it up with logic. So instead of saying, I'm going to pay you 6.5% interest on the balance, we're doing the math on this, building out a true underwriting, factoring in all the expenses, and then we can understand on our end before we talk to the seller, what's the maximum amount of monthly payment we can afford to pay a seller.
What is up, Growth House family? This is your host, Jesse Ray. I'm here with Robbie Faith. Robbie, what is up?
Jesse, what's up, man? Dude, I'm so excited to chat with you today. Very excited to get into some talk about real estate.
Absolutely. And we got introduced by a dear friend of both of ours, Ramon Casaus. And you actually came out to Scottsdale and hung out with us for one of our private dinners.
That's right. That was a lot of fun. It was great getting an introduction into some people in your world. You got some amazing people around you, and that was an awesome experience. So thank you for that.
Absolutely, man. You fit right in. And before we start the show, actually, as we start the show, I want to know what's a fun fact about you that a lot of people don't know.
Oh, fun fact about me. Put me on the spot here. What comes to mind is I used to do stand-up comedy. I don't know if you know this about me, but I started stand-up comedy at a talent show in middle school. My dad is a screenplay writer, so he wrote me a script, gave me a script to read off of, and it kind of took off from there. It was a big hit at the talent show. Then I started going to local comedy clubs and met a comedy producer who took me on tour around New Mexico. I did that for several years. It stopped at about 13, 14 years old, so I was pretty young when I was doing it. And yeah, man, one of the most challenging experiences of a lifetime, just being in front of a stage at that young of an age and getting in front of people who are expecting to hear you crack some jokes and make them laugh. So, but good experience, and I will never regret it. It was just definitely some good times. So.
That's amazing, especially at that age, being introduced and like exposed to that type of maybe like fear and then pressure to be on stage. Like, I'm sure it's probably helped you in speaking just in general.
Yeah, I definitely say so. I remember the first time I actually went on a real stage at a comedy club, I was about to throw up. Like, it was highly publicized. It was just kind of a cool novelty to see like a young person doing stand-up comedy. So there was a lot of people who came out to see it, and a lot of my friends and family included. But it's the first, I always talk about the first like 30 seconds really is like the hardest. And then once you're on stage, is a blast, man. And so, yeah, it definitely gave me some good experience being on stage and speaking in front of people.
That's so cool. Last question there. What's the biggest stage that you were on?
Yeah, last year, actually, I spoke at the Dallas Cowboy Stadium for Keller Williams Go Network. They had a Go Network presentation. They brought me in to talk about my business as an investor/realtor. I'm a hybrid realtor investor. And so my model is slightly different than the average realtor. And I came in to talk about that. There was about 600 people there. So it was a good experience and got to walk on the field at the Cowboy Stadium. So that was pretty dope.
That's sick, man. Well, I want people to kind of know a little bit more about you. So high level right now, Robbie, what does your life look like? Like, what's your main projects you're working on? You mentioned, a little bit right there. Who is Robbie Faith?
Well, real estate is my love language. So, everything real estate. I started as an investor. I bought my first property in 2005 and I house hacked that. And I got the taste of real estate. I got my license shortly after because I realized this was going to be, like a long haul for me. And just investing in my licensing made a lot of sense. So I started transacting as a realtor and been building both businesses ever since. Alongside that, I had the opportunity to buy a home business franchise with Sears. I owned Sears garage doors for New Mexico, and that kind of fell into my lap in 2011, built that up for a few years. 2015, I had an exit. It was a successful exit and made a few bucks. And at that point, reason I say that is like my way of thinking at the time was you needed to have money to invest in real estate, which in some capacity is the truth, but there are other ways, as we know, to be able to generate income in real estate without a ton of money, one of which is seller financing, which we could talk about that. But that was like the impetus to like really starting to grow a portfolio. So after about 2015, 16, I started getting very heavy into investing in real estate while building my retail business. And I just started buying, dude. And I would come across some really good opportunities, always been good at finding deals. I had the means to be able to do it. So I just started burring a portfolio, and from 2016 to about 2022 at the height, I had about a little over 350 rental units, a lot of single families, multifamilies, mobile home parks, self-storage facilities. And I've been able to, generate some amazing relationships in the process. And I'm working on a few development deals right now with some partners here locally. So that's kind of what the investment side looks like. I've got a investment team. There's 4 full-time people that work on my team, and their main objective is to source off-market deals for the company to either take down. Main objective is to hold. We want to own as much real estate as possible. That's like the top of the deal hierarchy for us. And, kind of the trickle down is, if we can't own it, well, let's try to control it. And then we wholesale. We can't do that. Like, the very last thing we do is list properties. So it makes total sense to have a core business for us to have a retail component to it where we work as realtors. And so we're a top 1% team here in Albuquerque at Keller Williams. In a nutshell, that's what my world looks like. It's several real estate businesses that run alongside each other, very symbiotic, very complementary. But my main focus has always been, I'm a future real estate mogul. I want to own as much real estate as possible.
Well, I mean, it sounds like you're on your way with 300 plus units, some different asset classes. So what made you get started? Obviously, you started with house hacking, and now mobile home parks. You said multifamily. Like, what was your kind of thought process? Just whatever deal penciled out and makes sense, that's what I'm going to take down.
I honestly give a lot of credit to the smarter people that were around me. I saw a lot of people were diving into this, it was not as well known as it is today. Like 2016, 17, people were still in the mobile home park space. And, many of the people in the forefront were doing it for much longer than that. But that's kind of when I found out about it. Just the business model was very attractive to me. You're not really, if you model it a certain way, you're not responsible for the actual homes themselves. You just have a parking lot. You're responsible for the infrastructure, but you don't have to maintain the homes. And so that was very attractive to me. I was immediately interested in trying to find a way to own the real estate. I didn't know how to find the mobile home parks. It's not like you go to a title company and just pull a list of mobile home parks, right? There was more obscurity around that. I think more of a barrier to entry, which was helpful. But I found a way to obtain a list, and I just started cold calling. I picked up a few deals. One of my first mobile home park deals was just an absolute home run. It was a 7-figure spread on that, and able to keep it, get all of our money back out of it. And it's just 5 figures a month in cash flow. It's been a beautiful deal. The goal has always has been to just scale a portfolio. So having bought single family, small multifamily, it's a slow road to building wealth. I'm a big believer in that type of asset class, but the objective is always to build like economies of scale, building some efficiencies where you can justify vertically integrating your management in-house. So that's what we're doing. You just starting to really snowball right now and collect as much as we can.
Man, there's so many ways I want to take this. I'm actually like writing some notes because I'm like, okay, I got some hot topic questions that are pretty popular right now that I want to run by you. Cool. Number one, when people get started in real estate, what would you suggest? Because I think there's 2 schools of thoughts, right? There's the house hack, like we both did, and then maybe, from 1 home to 2 homes to 4, kind of like the stack method.
Right.
And then there's the other way of thinking, which a lot of my friends teach on. And I'm like, maybe I should have done it this way, where they're like, you know what, screw all those baby steps. Just go partner with someone who's doing bigger deals, take down a bigger deal, maybe not focus on cash flow, focus maybe on the appreciation play while you have your job. And then 3-4 years later, you have a big exit. And it's just kind of different ways to think about it. So I'm just curious, what would your way be if you were starting over today?
If I were to talk to the version of me when I was 2016, without a doubt, just what I would have told myself is go bigger, faster. I think it's just a mindset shift. People think that you need to start and kind of crawl before you can walk. And to some degree, I believe that's the case. But, you can find the people who have the expertise that you don't have. And the most valuable part of anything that we do, in my belief, is finding an opportunity. Because if you can find the opportunity, what I've been very good at and how I've got involved in some of these development deals is finding an opportunity and marrying the deal with the right people and earning equity as a result of connecting the dots, essentially. So, I would just, depending on what the overall objective is for the individual. If the goal is to $100 million worth of real estate, it's going to take a long time to do that, with these single family, small multifamily deals, totally viable. But I think the misconception is that you do have to start there. And, going back, I would probably have jumped straight into some larger deals, but it's hard to just get the confidence the conviction, like to be able to get behind that. So the philosophy sounds good, but to really like get the energy behind it, it's tricky for people to wrap their heads around it.
100% agree. And I think that's why things like what you and Ramon are doing, where you have a community of people together, because that's the hardest part, right? Finding the
Exactly.
right people, knowing people who to trust. But if you're pay for a mastermind, you pay for a community, then boom, now you have that. I just know multiple friends of mine that are in the boutique hotel space. And I'm like,
Right.
dude, how'd you just take down a boutique hotel within 6 months? They're like, well, I paid for a mastermind and I went to their live event, connected with other people who are doing it. And now I'm a partner on their deal. And we found one 3 weeks later. I'm like, oh my gosh, that
Wow.
is really the shortcut. If there
Yep.
is a shortcut, it's just like
Right.
you said, connecting and finding the right people. How would you suggest finding the right people in, today's day and age?
I think it's easier now more than ever. I mean, just with the exposure that we have to, people in the space, in the arena that you want to be in, just what I always tell people is like, who is it that you want to become and who's already doing it, and do whatever you can just to be around them. So, these organized events of people with these niches, it's like, if that's what you want to condense time, just go there. And the amount of knowledge that you're going to get, it's going to speed things up. And I think, now more than ever, like there's just such a major opportunity to do that.
Totally agree. It reminds me of one of my favorite quotes. It's get in rooms where your dreams are their reality.
Oh, I
And
love that.
we
Yeah.
have that now. Like we have
Yeah.
access. Like you don't have to have a mentor that lives down the street or even the same city or state. You get a mentors across the country and even the world. So totally agree. Talk to me about one other thing, cash flow. We have a lot
Mhm.
of influencers in the real estate space. They're like, dude, real estate is not a cash flow play at all. You're smiling because you're probably you
Yeah.
hear this, especially recently
So
with the
interesting.
rates.
Yeah.
So here's the funny thing is that everyone's talking 2 years ago, like, bro, it's cash flow business, but now rates are up.
Yeah.
They're like, oh, actually, it's not a cash flow business. Create a real estate related actual business instead of making cash flow from the rentals. So I'm just curious. I just want to, go down this rabbit hole real quick.
Yeah, it's an interesting rabbit hole. I've heard a lot of talk about this, and the more I hear, the more I've kind of internalized the conversation about looking at the numbers and really mathing out what's going on. I've had the luxury of buying real estate. Started 18 years ago, so I've got some pretty seasoned debt on properties, and so from experience, I can tell you almost a couple decades going by, it's very challenging to generate true cash flow. When we underwrite a deal, we're truly building in all operating expenses. We're factoring in the repairs and maintenance. We're factoring in management. We're factoring in, the taxes and insurance and CapEx. And what's left over in theory is cash flow. It's hard to predict what could come up. And what I've kind of learned to accept is that in time, the cash flow is really how cash flow is generated. The longer you own a portfolio, the more you're going to be able to actually reap some of the benefits of having cash flow. And that's kind of the traditional method of purchasing. If you were to just base your strategy off of buying real estate with bank financing these days, even if you're buying at 50, 60 cents on the dollar, we're still seeing a major gap in the ability to generate true cash flow day one. The way that we are doing it right now is through seller financing. And with that strategy, we've been able to outcompete corporate buyers like Open Door and others who are offering very high numbers, cash numbers on properties that, we're also bidding on, but it helps us bridge the gap between bid and ask. We can actually afford to pay a seller their asking price or closer to their asking price, or even a premium. Like we've paid more than a property is worth. This has been a recent shift in my thinking over the past few years. And how we do that, how we can justify that is by, having the right seller who in trade for a price will give us terms that are very attractive for us. And so, it's a terms game. And, so for me, I'm a cash flow investor. Like that's truly what I'm seeking. Like we want to generate enough cash flow, positive cash flow after all of the expenses that we've talked about to be able to replace income on multiple businesses. So I think it's an offensive play, but I do think that it is viable with the right knowledge on how to craft a debt structure that allows a seller to get what they want and for a buyer to be able to get what they need out of it. There are some properties that I've had that I think it's just like owning a business, like any business. Some properties it's important to really take a look at the portfolio to see what the actual rate of return is, and you carve out the ones that aren't really performing well, And, I've heard some gurus call them like little piggy banks. So I think it's a very interesting concept that, yeah, and it's like a little piggy bank that you could crack open and roll it up into something else. But we are actually seeing true cash flow right now on some of the deals that we're putting together through seller financing.
Well, let's walk through that and let's talk about seller financing, because when I asked Ramon when you came to the private dinner, I said, Ramon, besides business stuff, tell me something that Robbie just loves to talk about. He goes, I don't know. All we talk about is seller finance. I'm like, that is your love language.
It is, dude. My wife does not have the same love language, so she's over it. But yeah, I mean, seller financing is like, it's where it's at. The market right now is
break it down really simply for the audience real quick. Seller financing, because there's lots of different types, right? There's wraps, there's subject to. So seller financing in general, what is it? And then break down how you structure it.
It's kind of just an umbrella term for being able to make terms that where the seller becomes the bank, right? I mean, a true seller finance, in my mind, is a property that is owned free and clear by a seller. There's no underlying debt. You truly make them the bank. And so instead of going out to your local community bank and getting a mortgage, all we're doing is we're negotiating terms for the seller to be the bank, and we make that payment directly to a seller, usually through some type of servicer, an escrow company or a servicer, and then they get a principal and interest payment, and usually there's some type of interest rate in some cases attached to that. So they're generating a return on the loan amount, and we just pay them instead of a bank. So that's essentially what seller financing is. And there's different types of structures that you could put together. If there is a mortgage on there, we could do a wrap of an existing mortgage with a higher balance than what is actually owed. So there's a little bit of equity between what the seller owes and what you owe. We can do a dollar for dollar wrap, which means that you're just stepping into the seller's shoes on their payment without actually assuming it. Still a wrap. The favorite ones, my favorite is the one where, you have a seller who's very sophisticated and understands, they've got an asset and they want to be the bank. We create a stream of income for them. So we get rid of the tenants, the toilets, the termites, all of the noise that being a landlord encompasses. And we give them true passive income in the form of a monthly payment. And the reason I like that the most, Jesse, is because there's no deal that won't pencil if there's no constraint on having some type of mortgage in place where we got to make sure that the balances are correct and the payments match up. And that's how we're able to put some really exciting deals together.
I don't know. How many are there in America where is this free and clear homes? Probably a lot more than I think.
There's a ton.
Really?
What I've heard, I don't know that this is exactly true, but I've heard from multiple sources that there's more now than ever. The statistic that I heard was about 40% of the homes in the United States are free and clear. So there's that interesting statistic. Whether that's accurate or close to, that's very exciting. That's the opportunity. The other exciting opportunity is that 60% of the outstanding mortgages have a 4% interest rate or lower. So even when you have a seller who has debt on a property, many people originated a loan back when the rates were more attractive. Another incredible opportunity to give a seller what they're looking for and getting in return some terms that work for us. It's a true win-win negotiation.
I love that. Let's just do a little role play because I just love to give something tactical.
Okay.
So if there's a caller, one of your people or even you call a landlord, what would you say to kind of like pitch them on seller financing and doing terms?
One of the first things that we ask is, I let them know that when we make offers, typically what we do is we make a cash offer. That's how we're having a conversation. It's not very common that we come out and say, hey, this is Robbie. I'm interested in buying your real estate with seller financing. Are you open to that? It's, hey, you want to sell? Of course, there's more to it than that conversation. But when we get somebody who's actually interested in it, one of the first questions that we ask once we have somebody who's definitely ready to make a yes or no decision, we know that they want to sell, is we ask them very simply, like, do they have a need for the money? Let's play this out. If I pay you cash, we have an agreement on a fair price. What are you going to do with the money? We find that more often than not, there's not plans around that. And truly, there's more exposure for a lot of people having cash. There's tax implication, right, on a capital gains in the event that they own it as an investment property. There's a tax implication on that. There's some issue potentially with having too much liquidity in a bank where we have in a high inflationary environment. So for them to remain as almost a partner, so to speak, in a deal where they have an asset that they're comfortable with because they know it so well, selling to a viable buyer and where they can generate a return on the balance owed to them. That worst case scenario, I fail, they take back a property that they have some familiarity with. And we find that when you navigate that conversation the right way, a lot of people can be receptive to it. I will say that what Ramon and I are doing is we're negotiating terms that work for seller and buyer. A lot of times for us to generate cash flow, we have to have some type of upside in making the payment very attractive, especially when we're paying a higher sales price. So how do we do that? We're stretching out the amortizations, which is actually more beneficial for a seller, meaning we have a longer time period to pay back that money, so less money goes towards paying it down every month. The sellers like that because they're getting less principal payments per month, but that's an option. The other thing that we typically go for is an interest rate that allows us to generate cash flow. Now, when we make these negotiations, an interest rate does come up. It's usually one of the first things that a seller wants to know. We negotiate based off of payment and we back it up with logic. So instead of saying, I'm going to pay you 6.5% interest on the balance, is that okay with you? Like, we're doing the math on this, building out a true underwriting, factoring in all the expenses, and then we can understand on our end before we talk to the seller, what's the maximum amount of monthly payment we can afford to pay a seller. And when we present it, we use logic. Based on the price that we're giving you and the down payment that you're looking for, I need you to understand that as an investor, we just need to be able to generate a return on our investment. So the way that we're doing that, because we're giving you your price, is we have to have these terms work for us. So we could pay you $1,000 a month in principal and interest payment. What does the interest rate come out to? We'll do the math on it and I'll show you, but I just need you to understand, here's why. And then we dive deep into very transparent. These are our operating expenses. It rents for $2,000. We pay you $1,000 a month. We don't get the delta. We don't pocket $1,000. We actually get more like this number because of all of our operating expenses. If we're paying you $10,000 down, $20,000 down, we have to be able to justify a rate of return on that money. And it needs to make sense for us to allow you to get the benefits of that rather than just putting it in a high interest savings with no risk at 4.5% right now. Does that make sense? Just having a logical conversation around it and really meeting their objectives, understanding their goals is how we're able to negotiate good terms.
Do these sellers look like a certain type of demographic or like an audience?
We find it's very interesting that you asked that. Some of the best deals in terms of really good terms and payment structures that we've been able to negotiate have been with people who are very sophisticated. They're very savvy. They understand seller financing and they understand it's a mechanism for them to get a lot of benefit after avoiding some potential gains on the investment properties. And they understand that there's a lot of security there. The avatar is truly like the best deals are the people that own more than one property and have a lot of experience owning real estate. And it really just makes it for a very reasonable conversation when you can just very plainly just show the math behind it. And they're investors also, like they typically, not always, but they understand that there needs to be something in there for the buyer.
It's so interesting because there's so many, I think this is a common misconception that everyone thinks and get into real estate and you just own some rentals. Like there's so many different games to play in real estate. And I've been blessed just to be connected with some amazing people in the industry, and they all have different thought processes. Like some of them are out of the real estate game, the rental wise, because they're like, I just want to be a private money lender. Like that's the most passive. Yeah. And then some people are like, I just want to, seller finance deals and be on the opposite end of what you're doing, looking to acquire them. So I'm curious, what does it look like for you? Like when you want to be more passive, what would you say is the most passive approach to real estate?
Again, going back to what the overall objective is, like for me, long-term legacy wealth for future generations. I absolutely love originating my own notes and manufacturing my own seller finance notes where I'm the seller. So my portfolio is comprised of a portion of that type of asset as well. And it's very low to no noise. It's very exciting, but there's a finite amount of time that somebody's going to pay you, even if you take it out 30 years, it's going to pay off. So I'm always thinking about how I'm going to be able to create some type of income stream for future generations of my family without me having to go and recreate the wheel. So it's a balancing act for me. I want a mixture of both. So I'm building out a blended portfolio of assets long-term, and then creating not as many notes compared to what we actually hold in properties and real estate assets that we actually own. But I plan on having that scaled in the next coming few years. So I'm very interested in both.
I love it. Talk to me. Seller Finance Society. Break it down. What's going on in there? It sounds cool. I just want to be invited just because it sounds cool.
Well, bro, this is your formal invitation. You are
Yes.
invited. So, Seller Finance Society, I often get people reaching out to me. Seller financing has kind of become a niche that I'm known for in my market. Been in this market, born and raised here in Albuquerque, New Mexico, which is where I operate out of. And so it's created a large volume of inquiries. People, even seasoned realtors, which is fascinating for me, reach out. There's a lot of obscurity around that for them. And so as a result of the amount of time invested into some of the conversations that I'm having, Ramon and I, just a beautiful confluence. When we started working together, he's had the same issue. We've been talking about how can we create an environment where we can educate people around it, since there seems to be some lack of that. And we can actually pour into a community and spend the time with people to teach them about this and get it all in one place rather than these one-off conversations. So that's how Seller Finance Society was born. And it was launched at about the start of the fourth quarter last year. We have a free version of it through school, and people can go there on my Instagram handle and just go to my profile, my bio, and they can get in there free. There's a lot of good information. In fact, Ramon and I have professionally produced 20 plus hours of video content. Him and I just like laying the foundation of real estate investing and then deep diving into seller financing as well. But that's the kind of the catalyst to how it was born. It was just a need, I think, for being able to educate on it and get people to truly understand that there's a different way to buy real estate. And this has been around for a long time, but there's just a lot of people who don't understand it. And we've been able to utilize this strategy, and it blends very nicely with my wholesale business, where we can negotiate terms with the seller and bake in the financing for a buyer rather than them having to go out and get hard money. So we make it easier to dispose some of our deals that way through wholesaling.
Interesting. Okay, walk me through this wholesale business. I think I get it, but you do it a little bit different than most wholesalers.
Well, we just have multiple exits. I mean, it's the same concept. We're controlling property, we're signing contracts. Sometimes we double close them, because we're very keen on this type of financing. Like, my team is highly trained on having this conversation. Just as I introduced it to you, we kind of take a seller through the motions of what their objectives are. We gauge, their interest on whether it'd be a good fit for cash. 95% of the people that we talk to, our number just doesn't work, right? It's just too low for us to be able to be the buyer on it. And so this is a mechanism for us to be able to, pay a seller a higher price. And we will then, my team knows this is another potential exit strategy. We'll talk about seller financing, introduce it, we contract it. And then once we have contract on it, then we can go and sell our position in the contract with the seller financing structure that we've put together. So, I mean, it's a great way to sell deals.
I love that. First of all, anyone listening, it's a free community on School, so everyone should be checking it out. Number two,
right.
I want to know something that people don't like to talk about. People on Instagram, we show highlight reels. Everyone just shows how amazing whatever they're doing is, whether it's real estate, whether it's their business. Every entrepreneur has a Lambo by, month 6. Let's talk about the facts. Let's talk about real life. What's some of, we maybe don't call them failures, but learning lessons that you had to experience in your, 18 years in your career?
I often think about leverage in my businesses, and it really was not something that I've implemented until, some of the last couple of years. I've been, the one wearing all the hats for so long, and I knew that I wanted to build a business around it, but, you're just in the grind and you're just so busy. You got to be careful not to go too long without recalibrating and understanding what it is that you're setting out to do. So I've taken more time to actually slow down lately and plan, which I think is something that a lot of entrepreneurs struggle with. Like, actually, it pains me. I'll tell you, Jesse, like, it's painful for me to stop and slow down because I just want to jump back in and lock up more deals and push the team member out of the way. Like, let me just jump on the headset. Let me lock this in. But you can't grow that way. You can't grow a business that way. So I've learned that was a valuable lesson. I've had some flips where I just planned poorly. I've still done well on most every one of them, but there's just definitely been a financial education around planning properly, especially when you've got multiple projects going on. I'm grateful that nothing, too painful, but that's what comes to mind.
What about what's next for you? You got a couple different companies. 3 to 5 years from now, what's the goal for Robbie?
Yeah, so I appreciate you asking that. I've got 3 kids. I've got twin boys that are 3 years old, and I've got a daughter that's 5. I talked to a friend of mine he's in the financial services business. He's a wealth manager, and he said something that was very interesting and has kind of stuck with me on a recent conversation. A lot of the people that he talks to that have high net worth, he said that they earn too much money they will outlive their money, which may have been the goal. But a lot of them, when he asks them if it was in line with what they set out to do, he said the overwhelming response was that they wish they worked less and that they could have stopped long before. So he challenges me because I'm such a big thinker, and he tells me maybe you could be probably good right now and just spend more time with your family and just let these investments compound over time. And that has really given me some permission to feel good about slowing down a little bit. It's hard for me to do it, but the goal is to get these businesses self-functioning and to spend more time with family and travel more. Like, that's the end game, is have systems and processes in place where there's growth happening. That's how I get fulfillment, is through growth, but it could happen without me being there. So like, that's success for me, is without my involvement, the needle is moving.
I love that. I think it's super rare to like be able to get around certain people that have that perspective where they're like, I've done it, or I've talked to all these people, and you might still be in the thought process like, oh, I want to, like, this is an example, I want to be a billionaire. And then you talk to the billionaires, they're like, like it's just a metric, just zeros in a bank
Right.
account. But I wish I would have done X, Y, Z. And so I
Right.
actually read and just finished a book. What was it called? Never Enough by Andrew Wilkinson. Have you read it?
I've not.
It's pretty interesting. And he talks about that story and just about like, okay, let's think about the end in mind. And what are the priorities? Like for you is travel, be with your kids. So I think it's super
Interesting.
important every, few years or even every single year to recalibrate, where am I going and why am I doing it? So that's a really good conversation that you had.
Yeah, that's fascinating. I'm going to check that one out. But yeah, there's a book that we talk about. I've not read it yet, but it's on order, so I'll let you know how it goes. I think it's called Die with Zero,
I
something to
was
that
just about to
effect.
say Bill Perkins is another one.
Is
It's a
that is
very
that
good,
the
yep.
one? So you can speak to this more eloquently than me, but I think the theory is just, the money is fun points, or it's a point system. It's like, use the money, right, to have the experience. I think that's what life's about. I think it's too easy to get caught up social media watching everybody in there, like you say, the Lambos. It's like, what is this all really about? It's about life experience and, actually achieving those types of experiences that you're looking for with your family or travel or relationships. And it's what I admire so much about you. I could tell you're a wealth of relationships, and you're such a genuine person. So I'd really admire that. That's a very interesting concept. And I'm going to read the book that you're recommending.
You would love that. I appreciate the words, by the way. I think it's been just me connecting with people that have been super successful. And I ask them, like, what are things in your life that you wish that you would have now, or maybe done a little earlier? And they always say the same things, man. They say, I want deeper and better relationships, and I want more memories. And so that's now kind of my mission, is to be able to facilitate and curate those kind of fun experiences with these guys that, I'm connected with, and now my network and circle. That's part of the reason why I hosted dinner. So I'm just like, let's get you guys together, because let's dive in. Let's have these deeper relationships that you're able to speak the same language too. Because I think once you get to a certain level, it's hard to find certain rooms where everyone's not just asking you things as a mentor, but now you're like, okay, I need to outgrow this room and get into new rooms. And so, yeah, I love that.
I love that. That's very interesting. It's like the memories and experiences are the currency, right?
So true. So as we wrap up, man, give me a podcast or a book. I mean, we talked about Die with Zero, but you haven't read it yet. So give me a podcast or book that you're like, this has been a huge impact in my life the last couple of years.
I'm starting to go a lot deeper on the notes. I had the opportunity to see a gentleman by the name of Eddie Speed, one of the masterminds that I was at recently. He's got not to plug him, I don't even personally know him, but I'm just going really deep on his stuff right now, talking about, how he has built a machine that just manufactures notes. So very fascinated about that. It's because the amount of noise that I have in my businesses right now, it is a lot. And I fantasize about what a life would look like when it's not going to be that way. And so that's what's attractive to me about going deeper on that. So Eddie Speed has got a program, I think, called Note School, but he's got a YouTube channel I've been watching at the gym. And then what else? Oh, Gap in the Gain. I'm finishing up right now. Such a good one, dude. Like, I have been living in the gap for so long, and it's been a struggle, my friend. And the recognition of that process and really taking the time to look at what I've been able to accomplish has lightened the load for me. It's a lot less heavy. So I'm grateful for that book as well.
I love that book so much. I just finished it a few months back, and two of the things I can just remember off the top of my head that I need to actually start implementing. You know how you read a book and you're like, it was so good, and then you're like, I didn't
Yeah.
implement any of it.
Yeah.
So I'm
Yeah.
so glad you brought that up. There's two things I can remember. One of them was, it's so simple, but just like write out your day the night before. The most basic thing. But I remember that one. And then also it talked about write out what is success, not to anyone else, but what is success to you? I think we almost talked about that a few minutes ago, but I think that's something that I need to keep doing. Okay, what does actually success look like for me?
I love that. Yeah, that's some good stuff, man. That's such a great book.
So how do people get a hold of you? What's the best ways? We'll put it in the podcast description as well.
Yeah, so best way to get a hold of me is probably on Instagram. My handle is Robbie Faith Real Estate. There's an E at the end of Faith. That's very active on social media. So yeah, message me there, and I'd love to hear feedback if what anybody's struggling with, or any ideas that I could implement in my business from some of your audience. Please reach out to me. I'd love to hear.
Absolutely. Robbie Faith, appreciate you being on the Growth House podcast.
Jesse, my friend, thank you so much, man. Always good to see you.
Absolutely. Take care.